This week in economics on the 14th of November 2015. Our condolences to the French people. No condolences para Francis. We'll put this on our show page there, and we remember those who have died in an event that was unfortunate. A insult to the humanity, no doubt about it. And of course these things affect budgets in the long term. If you recall the events that surrounded 9/11 in the U.S. and the acceleration of spending on armaments, and also the development of a new government entity known as Department of Homeland Security, and accompanying products there, the armaments dealers, not as much as in the Vietnam era, but substantial to the period of the early 2000s, and the growth industry out of it for protection, etc. there, and of course this is across the European sphere and the world. So we'll be watching those figures, but now we'll go to something more akin to the U.S. Advanced monthly sales for retail and food services. This is from the U.S. Census Bureau, and it's dated the 13th on Friday, released at 8 a.m. in Washington, D.C. Beginning with December 11th released for November is a special note. The estimates will be based on a new sample. A sample for all advanced monthly retail trade survey is selected once every 2.5 to 3 years. A little information on the new sampling method, but they do have a new one. The advanced estimate of U.S. retail sales and food service sales for October, adjusted for seasonal variation, holidays, trading days, differences, but not for price changes, were 447.3 billion, an increase of 0.1% from the previous month, and 1.7% above the previous year. That would be October of 2014. Sales for August 2015 through October 2015 was up 2%. From the same period a year ago, the August 2015 to September 2015 percentage change was revised from 0.1 to 0.5%, virtually unchanged there. Retail sales were virtually unchanged from September 2005 and up 1.2% above last year's. Non-store retailers were up 7.1% from October of 2014. Motor vehicles and parts dealers were up 6.2%. Let me go down here a bit, and we'll look at some of these estimated monthly sales for retail and food services by the kind of business they were in. This is a 10-month total here, not adjusted for retail and food sales. The change was 2.1% there, and the months of October, September, and this is 2005. If we look at it, 444,189, that's in October, and September 430,150, and in August 456 and 415. That's 1,415 there. So we look at totals here, and we'll just look at the totals. 10-month total 4,360,708. This is food and retail service data here, the monthly service. And if we go to motor vehicles, that is 927,315. And we'll break it down to furniture, home stores, 83,747. Electronics, 80,040. And this, they break this down. Building materials, garden supplies, 279,332. Food and beverages, 562,389. And healthcare and personal care stores, 258,969. Gasoline stations, 369,473. We'll skip some of these types of stores here, but general merchandising stores, roughly 500,000 there. And some of the estimates here, and we looked at the percentage change for motor vehicles and parts dealers, minus 0.5%. Furniture, home services, 0.4%. This is in September, and this is the October advance here. And basically the kinds of businesses we'll give gasoline stations minus 0.9% there. We just hit some of the highlights that would be of more interest to people, and some more percentage changes, but we won't really go through that. That is a little bit different there. We'll look at the International Energy Oil Market report here. Global demand growth is forecast to slow to 1.2 billion barrels of petrol per day in 2016, after surging to a 5-month high of 1.8 billion barrels in 2015. That is the market report there. For November's information, we don't have that. The global supply reached 97 barrels per day in October. Non-OPEC recovered from low levels despite resilient production, such as Russian non-OPEC supplies is forecasted to contrast 6/10 million barrels, 6.6 of a million barrels next year. Light crude, U.S. light crude, the drivers of non-OPEC growth is expected to decline 6/10 in 2016. OPEC crude oil is headed to study in October at 31.76 there, with declines in Iraq and Kuwait offsetting higher supplies from Libya, Saudi Arabia, and Nigeria. A slight tightening in fundamentals lifted the 2016 call on OPEC to 2/10 million barrels per month. The commercial inventories rose counter-seasonally by 13.8 million barrels and set a record of near 3 billion barrels by the end of September. The pace of global stock building slowed during Q3 to 1.6 million from an average of 2.3 million barrels per day in the second quarter, but remains significantly above historic averages. Refinery runs sunk by 1.2 million barrels per day in October to 78.2 million barrels per day with seasonal maintenance in swing. The October futures look for Europe winter weather is likely the effect on heating demands as well as focus there on OECD stock levels for mid distilleries. The third article, well, won't get into much of that, but the impact of President Obama's rejection of Keystone Pipeline, while a fifth look at the heavy reliance on Gulf of Mexico output for U.S. supplies this month. Issue concludes with opportunities and challenges for European refineries. And this is of the International Energy Agency, their report. And we'll jump back here. Started with the Reuters article, a weak demand, U.S. Sales here, and it's roughly down 1.6 tenths at just 0.1% of this month. This was a surprise 5 tenths fall in sales at car dealerships and so forth there, but from Jennifer Lee, senior at BMO, Capital Markets, there's not a great start to the fourth. This is not a great start to the fourth quarter, which is important as we head towards the all-important holiday season. Fears about levels of consumer spending prompt department store chain Macy's. Of course, they cut their profit outlook for the year by 10% on Wednesday. The number of these rivals, Nordstrom cut its full-year forecast also, and there's a number of others that have cut theirs. J.C. Penney, one of these operations that have been posting losses for a very long time, a loss of $137 million for 3 months, October, to compare with, well, it was less, so $188 million lost last year. Sent the firm's shares down 10%. So these are some things, and this will also impact what the Fed will do in December. And we'll have to, as one would say, look at that particular situation and see how it affects the outlook. Eurozone economy slows in third quarter. This is from the BBC, incidentally. And that was actually from the BBC and not Reuters. Sorry about that. Growth in the Eurozone slowed 3 tenths in Q3. That's the latest figures there. The pace of expansion in Germany, Eurozone's largest economy, slowed, but France returned to growth. European Bank will extend its stimulus program, is expected to there. The Federal Statistics Office said the economy has shown continual moderate growth there, and that's the key, moderate. The French economy grew by 0.3% in the same period, but this marks a pickup from zero in the previous. So you're seeing all these economies are struggling at best. We have left periods of the 2015 period of very weak growth that France had experienced since 2011. That is from the French finance minister Spipin. And again, on quantitative easing, they continue to talk about that. What the European Central Bank will do is a matter of speculation there. Let me just grab a few other points here. We won't get into the markets yet, but also one thing to note, there was a number of strikes going in France on Friday. Medical workers, airline workers, etc., medical workers, of course, were called in to work. And that, is a situation where you have a national emergency in France. To this record glut of 3 billion barrels there, we started out with it, and its effects there, of course, on Asian stocks, they fell all over. They were down, and we'll get into that a little bit later here. We were looking at some of the responses here as far as growth in Q3, and we will continue, incidentally, to look at Q3 and see where Q3 is expected to go. And we'll go now to the Reuters here, and basically some of the same types of information here as far as a number of low performing stocks. We won't go to J.C. Penney's, but that is one various people looking at what's going on. We did that. Kohl's is another one there. They are competing, and that's the whole thing. They're competing with the same types of for the same types of consumers. And from the outlook, immediate outlook, many of these stores are limiting their buying selections, we'll call it, and very difficult to say at this point in time where some of these stores will go. We're talking about the Walmarts of the world, etc. They will be not offering necessarily the buys that they did at one particular time. So in other words, it is being gauged differently, and we'll look to that. Now Reuters has something here on the rates. We've been looking at this for quite a while, what the Fed will do. Very, very difficult to determine exactly what the Fed will do in December. The Reuters poll sees inflation now at 1.9. That's close to the mythical 2%, but the mythical 2% is just that, mythical. Inflation is so far below the target of 2%. The Monetary Policy Committee want to raise its benchmark ratio from 0.5 tenths until at least April. That's a Reuters poll there. Now, this is in the Bank of England. I'm sorry, that's their forecast there. They will not raise their rates. British sales numbers offered on Thursday. Well, that will be on Thursday. Look at several of these economies here. South African Reserve Bank holds its repo rate at 6%. China, where Beijing has rolled out a theory of support their own brand of quantitative easing, will show how that's some things coming up next week. The housing market there. And we'll now go to Bloomberg and check on some other types of information here. This is an interesting week in that we don't have a lot of reports this week, not unusual at all. Some weeks we have more statistical data than other weeks here, but we'll, as I say, do what we can do as far as this is from Morgan, J.P. Morgan. I think it's worth looking at there. The headline here is dollar rally may extend, 6 months after the Fed lift off there. This is another index here. The Bloomberg dollar spot index reached its highest level in data going back to 2005 this week. Speculation that a strengthening of the U.S. labor market will pave the way for the central bank to boost borrowing costs at its next meeting. J.P. Morgan is amongst the world's largest currency traders, including Deutsche Bank and Barclays PLC, are expecting the dollar to advance as the Fed tightens monetary policy. The policy gains will probably peak in mid-year. That's from John Norman, is head of Currency Exchange Commodity International Rates Research in London at J.P. Morgan. The bulk move is probably going to be the first 3 to 6 months of liftoff, whose bank is the fifth largest currency trader according to Euro Money magazine. The U.S. Currency ended the week a little changed at 1.773 per euro. The Bloomberg gauge, which tracks the greenback versus 10 major currencies, was stable at let's see, 1229.37. Greenback strengthened, to $1.06 per euro and 125 yen by mid 2016. Dollar swings here. The dollar has risen 1.6% this month, boosted by employment report. Wouldn't put that much into that surge of 271,000, which exceeded covers all expectations. Turmoil in the Japanese economy, one of the factors that sort of counterbalances of this. The currency swings between gainers and losers for the past 8 months as turmoil, of course, in China. From William Dudley, he is at the New York Fed, said the conditions for rate increase could soon be satisfied. That was in his speech to the Economics Club of New York on the 12th of November. After liftoff, commas, I expect that the pace of tightening will be quite gradual. The Fed has talked about that. Chair Yellen has talked about it. The trend is still up for the dollar. Dennis Heckman, senior fixed income strategist in Kansas City at the U.S. Bank Wealth Management. They oversee $126 billion expressed currency to rise at a very moderate rate. We'll take a look here at the Economic Club of New York and grab a little bit, perhaps, of what Mr. Dudley has to say here. And one of the old and venerable economic clubs around the nation. Founded in 1907, and they've had many people to appear before them, and let's see here. Not sure if this will be in past speakers or not. Depends on how far they. Well, this is not exactly what we were looking for here. We were, let's see, very quickly we can. If we do find his speech, we'll include it in at the end of the broadcast here. It appears as if it's going to Reuters, where his speech will be. This is Dudley, we assume, and we are kind of. It's probably just a summary of his speech. Here, Chair Dudley. You will hear a little from Chair Dudley at the end of the broadcast. We'll skip around here a bit and go to the BBC and do the numbers, and then we'll bring in Chair Dudley later in the ball game here as we sum things up, and we'll get to the BBC here and do our numbers, and then we'll get into the of Dudley, and these will be Friday unless otherwise noted. And we're constantly looking here. Okay, just 1 second here, and here we go. Nonetheless, the FTSE, this is on Friday, was down and 30.39. In Amsterdam, they were down 6.30. And the DAC was down 142.08. In Paris, they were down 48.70. In Brussels, 6.06, or not 6. In Madrid, 32.60. In Zurich, they were also down there, 67.10. In Moscow, 11.79 in the negative there. In Johannesburg, 294.82. In Bombay, 510.87. In Karachi, 140.76, all in the negative. In Lahore, 33.03 in the positive there. In Colombo, minus 4.54. In Tehran on Wednesday, 12.10. In Sydney on Friday, negative 70.40. The Nikkei 100.86 in the negative. The Hang Seng in Hong Kong was down 4.92.78. In Shanghai, they were also down 52.06. In New York, they were down 202.87. The Nasdaq was down 77.20. In San Pablo, in the negative, 366.54. In Mexico, they were also down 502.79. Was basically red ink day for most. We'll go to the commodities now. We start out with overall a point here. The crude oil futures index, Brent crude oil, I'm sorry, index at negative 69.69. Brent crude futures were down 69 cents at $44.50. Brent spot was down $1.52 at $43.74. West Texas Intermediate was down 92 cents at $40.83. T-Boone picking a jump for joy. He remembers $15 barrel oil, and we'll get into that basically now in late 70s, early 80s dollars. We're getting there very, very close here. The gold was down $3.85 on the Forex at $1,083.75. Dubai gold was down 80 cents at $1,081.80. About the same. And we'll go to the Euronext Life futures. Cocoa up $22. A corn down $1. Robusta coffee down $13. And the Bloomberg Commodity Index, another index we use here, was down 0.44, or 0.5%. And it was at 82.43 was where the index sat. And this will do it for the numbers. On to the Bank of New York's Mr. Dudley, and an edited version of his speech to sum this week up. For those in business, have a productive one. And again, our condolences go out to the people of Paris and the French people. Good day. Oh, and the consumer, keep your eye on the ball. The holidays are out here. I almost forgot that. But they are coming up. There'll be a different regime. Some of these stores are unfortunately opening on Thursday, but the quote-unquote bargains of Thursday, so-called Black Friday, there are boycotts obviously against it by the activities.El's people, and on Cyber Monday. But the buys there will be proportionate. In other words, they will be spread amongst several days of shopping. They will have, of course, some buys out there that is a sort of a glut with some of the retailers. Thus, as they say, keep your eyes out there. If you are so inclined, there will be some buys out, but perhaps I've noticed over the last couple of years there are less buys out on the the Black Friday and Cyber Monday. Good day.